FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
This episode of the Financial Survival Network is brought to you in part by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of over 185 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the New York Stock Exchange American as SAND.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's October 15th, 2018. This year is almost gone. A lot has happened, a lot still to happen. And when you're looking at these markets, especially the cryptocurrencies, they've taken a major hit. Hey, just in case you didn't know, we issued a report and a sell recommendation on, well, I actually prepared the report on December 16th, 2017, and it went out the next day. It's saying sell half of your cryptos. Of course, probably very few of you listened, but I know some of you did because I've gotten some of your emails. And by the way, be a part of the show. Communicate with us, be a part of the dialogue, part of the debate. The email address, again, is kl@kerrylutz.com. So where are cryptos heading? What are the trends that really are dictating where cryptos are heading? Is it all just manipulation, or is it more than that? Well, Stephen Menking is with us now. Stephen's a bit of a crypto expert. Stephen, welcome to the show.
Well, it's a pleasure to be here with you, Kerry. I thank you for that kind introduction. One of the things I would mention is that it's hard to be a crypto expert, so to speak, because the way that the space is and the way that the space functions changes so much from even month to month, or let's say more of a quarter to quarter kind of basis. The standards and practices, whether we're talking about the regulatory and compliance side or the price action side or the trading side or the investing side or the fundraising side, the actual application of this technology, it's all is still in the early stages. And so, one of the things that I will often say is that sometimes the best opportunities aren't built in that first stage of the cycle. There needs to be a bit of a teasing out of what actually will happen. Will this technology survive, and who will survive in the ecosystem? So I would hesitate to call myself a cryptocurrency expert, only because I've only been researching and involved in the space since 2015, and I've only been doing personal investments since 2016, and only functioning in a capacity with an asset manager since the beginning of this year. So, nobody in crypto has a multi-decade track record, unless you want to count some really technical open source software people who would have been working on some of the nascent ideas that found their way into Satoshi Nakamoto's white paper for Bitcoin in 2008. So it's a tremendously complex ecosystem, but it's part of something that is developing and dynamic, and of course challenging to deal with depending on the way that you're positioned. But as for me, of course, I can't give any official investment advice. Everything I say is educational purposes only. Standard disclaimers apply. All of that kind of stuff. Just need to make sure that that's out there on the table, because we're talking about a volatile investment asset class, and people have certainly made some mistakes. If they didn't follow your sell recommendation, that would be great. For me, my trades are covered, and so now I'm investing and trying to find what the future will be. What role will blockchain and cryptocurrencies play in the next iteration of the global financial system? Because as you well know, and as many of your guests point out, we are, from a timeline perspective, at the end game of the current fiat system. After, of course, becoming unpegged from gold in the early 70s, you only get a limited amount of time to run that kind of play. And usually it's a turnover into something else, and it's just going to depend on who gets to meet and who gets to make the rules. In the past, that has usually been after a significant military conflict, and the players who are at a high enough level to to finance and fund both sides to get to control the outcome. But it is possible now, I think, for the first time in a couple centuries, for true freedom to be established. That is not a foregone conclusion in my view, but it is an important possibility with new technologies and a sea change in the way that people look at the world and the way that people understand the corruption that has taken place at the highest levels. Ultimately, Carrie, I think we're in a pivotal moment where we have to decide if we are going to see freedom and righteousness as guiding principles, or if we're going to take a turn into totalitarianism and find ourselves in a slavery and evil kind of situation. And the extent to which cryptocurrencies and blockchain technology are involved in that still remains to be determined. There are those who would advocate distributed ledger technology like cryptocurrency as one of the foremost guiding principles to establish freedom from the standard archetype of the state. And there are others who view it as potentially a means of total control and surveillance and everything else like that. So depending on who you talk to, you'll get a variety of different opinions and perspectives, up to and including that Bitcoin and cryptocurrencies are a creation of intelligence agencies, or even of an AI, or something like literally time traveling. So depending on who you talk to, you'll get a wide variety of opinions. So what I try and do is look at the situation on the ground and do my best to present a sober kind of analysis based on the different possibilities, given that it's difficult to rule anything out entirely carte blanche, but we have to evaluate the hypotheses and based on their accuracy and their predictive power and the scope that they have. So we just have to be reasonable when it comes to all these things and try to avoid getting caught up in the hype cycle, and to recognize opportunities where they exist and to steer clear of other things where the risk isn't worth the reward. So like anything in investments or in life, really the procedure to make decisions that you use is going to be pivotal, because if not, then you're going to be making it up on an ad hoc kind of basis, and that's a guarantee for disaster, if not just generally speaking, bad outcomes.
Yeah, bad outcomes of which you want to avoid it. So look, we saw a tremendous decline in cryptos, and really it was to be expected. The so-called experts were telling us they were going to go up forever. Look, been on this, I've been to the rodeo before. I know that can't happen. And all of these mavens were wrong. So why were they wrong here? What was the driving force that led cryptos to take the hit?
Well, for starters, from a market dynamic perspective, you have to say at the very base of it, the technology had been outpaced by the price, and there was speculative excess inside of the system. We're talking about a sequence of events where in the course of a couple months, the ecosystem went from a market cap of 200 billion to 800 billion. And it's not as if that was driven by fundamental developments in the technology over the course of time. It was driven by capital coming into the space, and that leads to momentum traders looking at it as a way to make a quick buck, and then all of this hype cycle kind of thing goes on. And it's worth noting that in the December 2017 timeframe, you had a month that started out with the price between 10 and 12,000 per Bitcoin. We'll look at BTC here as the primary arbiter of the market, right. And then in the course of just a couple days, it went up to 18,000, then back down to 13,000, then up to a high price point of 20,000 before coming back to 12,000. And this is all in the few weeks leading up to Christmas. And so from my perspective, it spent so little time above the 15,000 mark, sort of chopping up and down around there before ultimately falling back to the 6,000 area in the beginning of February. Like, these are tremendously volatile moves, and it's so volatile, in fact, that one of the overall use cases that was presented for BTC as a store of value or as a potential currency in terms of medium of exchange, that model was damaged because of the volatility framework. So essentially for me, when I'm looking at the actual trends, I tend to discount that price action that really took place above 15,000. Certainly, like I remember a day where I was watching this and it went, just totally parabolic, this move. And so not a ton of volume actually takes place up at these actual peaks. Like Bitcoin wasn't at 20,000 for more than a couple ticks. Like maybe a couple trades went off up there, but if you blinked, then it was back at 12. So there's tremendous kind of volatility up there, and so there's a lot of it's a frothy top, and it's not as if the future potential was eliminated, but it was certainly overestimated, and the move got ahead of itself and certainly got ahead of the fundamental technology. And then, of course, there's other market structure mechanics as different exchanges and venues came online, like futures, that allowed people to place short bets. That wasn't quite as prolific a thing in previous years. And so, if you can only take one side of the trade and there isn't this counterbalancing mechanism for people to bet against the market, then obviously there's a bit of an upward gravity, so to speak, just because of people who would bet against it wouldn't necessarily be able to take that kind of position. And of course, plenty of people who did ended up can end up losing boatloads of capital even on the way down because of the sharpness in the moves. But from my perspective, when I look at this, you have to say that overall move up from the beginning of November to the end of the year and into the beginning of 2018 was certainly overdone. It was overstripped, and now we end up with a scenario where various quant firms are now able to look at leveraged exchanges and places where people can put on these crazy trades. Like on BitMEX, you can get up to 100x leverage on things. I will give one piece of investment advice, and that is you should never be making a trade with 100x leverage where you get a margin call after literally any downtick. So what the machines can do from these sophisticated quant folks is they can look at the book and they can essentially ping the network and tell where people stops are on trades like that, where the margin calls are going to take place. And so then they can essentially push the price, because it's a relatively thin market. They can push it through the stops and trigger all of that to get some waterfalls. And of course, that's not responsible for the entirety of the downdraft here, but now the marketplace is a bit more sophisticated in terms of its mechanics, and to many it's a problem, because they would view all of these extra functionalities, whether it's derivatives or futures or leverage or these high frequency algos. People on one hand would view that as manipulation, quote unquote, and there are other sorts of structural things that people it's difficult.
So look, the actual architecture, infrastructure of Bitcoin, all right, it isn't perfect. Yes. If the nodes are functioning, then the transactions, the blockchain will function. But if the nodes are brought down by whomever, we have a problem, don't we?
Well, it's certainly a problem in the short run. In order to eliminate the network entirely, because part of the benefit of a decentralized and a distributed network is that if the network is taken down, the entire history of the network can be repopulated even from one of these things, kind of like a starfish in the analogy.
But here's the thing. Here's the thing, though. If I manage to shut down Bitcoin for 3 days, what do you think the ramifications are?
Well, it would be catastrophic for the price and for people being willing to hold the asset. I think the key positioning of Bitcoin at the top of the heap here is that in order to do that, you would need to essentially take out the entire internet for everybody, which is not
necessarily. There's only 7,000 Bitcoin nodes on the planet. Now, granted, me in my studio here in Palm Beach County, Florida, don't have the capability to do it, but there are these botnets. Look, they turned my VCR, they weaponized my VCR last year or the year before and shut down, major sites. So there are people who've got the resources, the ability, and perhaps even the motivation to really put a hit on this, isn't there?
Well, there is the motivation there, depending on who you're speaking about. In terms of like being able to capture the value of the network, you could say, all right, well, there's roughly $100 billion out there for someone who wants to go try and take it. But of course, if the network were compromised, then the market value of that $100 billion wouldn't be worth that. So there's no shortage of people attempting to derive exploits and everything else like that. It would take a tremendous amount of power, and there are defenses in the network that take place. Part of the aspect of this conversation from a technical standpoint is slightly above my pay grade in terms of the way that those kind of attacks would work. So long story short, Bitcoin is the most secure among the cryptocurrencies as you measure security by hash power and all of the rest of that. And I would have a tendency to look towards Bitcoin as that standard, at least in the space, because it's been operational for the longest period of time. It's open source, so people can understand what's going on with the code, and the thought process is from a game theoretic kind of perspective that if there was a systematic vulnerability inside of that could be easily exploited and harnessed, then it would have happened already. Now, that doesn't guarantee that that's the case. Something else could be developed, and one of the conversations that goes on in terms of these networks is quantum computing. So if we see a general change in the ability of computers to solve the math problems that are central to the security of these blockchain networks, then we could hypothetically get a situation where a sophisticated network of computers could, quote unquote, take over. But there are other ways of expanding the security protocols. It's just difficult. There does seem to be an arms race in terms of computing power and processing methodologies. But in order to wipe everything out, there would have to be some significant collateral damage, and the incentives for people to go in and do that, they certainly do exist, but it wouldn't just be purely monetary, because like I said, if you were able to compromise the network, then that's essentially a fatal flaw, and you would have to imagine that the market cap of the cryptocurrency ecosystem, would have the possibility, a significant possibility of going to zero if all of that stuff is compromised. You essentially have to start from scratch. And so like if you're trying to pirate it, you'd rather go, try and hoist some credit card numbers off of the deep web and see how far you can get on that, because that might be more valuable to you from a purchasing power standpoint than a whole arsenal of cryptocurrencies that aren't worth anything.
Yeah, well, but my point is this: there are players in there, and perhaps governments, that if the crypto bandwagon gets out of control, this is a possibility. Anyway, I didn't want to get too bogged down on it, other than to explore the possibilities that this can happen.
Yeah, what I would say, Kerry, just as a final point here, if this conversation is rather opaque and difficult for people to access, and so if you're a person who has listened to this for a few minutes, is like, I don't understand really what's going on, or this sounds too dangerous for me, or something else like that, I don't want to deal with these risks, then the simple advice would be not to get involved. Like, you can't deal with something that you have no appetite for, or the risks are incomprehensible. Yes. And so for many people who are getting involved, they see the potential in the technology, and they understand that there is an extensive litany of risks that you have to take. And that's why you just have to be responsible with your capital. Like, nobody should be taking out mortgages to buy Bitcoin or anything else like that. Even if that does work out, that wouldn't be the right strategy to undertake. Right. If anything, you have to treat it like open source venture capital investment, where you can do something. You wouldn't be saying, all right, I'm making a bet based on the idea
I'm not saying
world reserve in 5 years.
No, I'm not saying to place a bet. I'm saying that you got to be aware, and that's a real risk that nobody ever really addresses. So anyway, this is very esoteric, because only people who can really assess the potential risk are those who are really responsible for the backbone of cryptos, and they do talk about it. I mean, there's other issues, but there's potential problems. So look, gold versus cryptos. Do you see a relationship there? And do you believe that perhaps they're going to move more in tandem in the future?
It's possible. I mean, we do see some elements of correlation, but because of the change in market dynamics and mechanics inside of crypto, that's always liable to change. Like you couldn't say, I couldn't point to, let's say, any historical number for the correlation between precious metals and cryptos and say, okay, well, this is something that you can use to understand or to predict what's going to happen in the future. And generally speaking, the way that I have approached building a portfolio, I have approached it starting with precious metals, gold and silver, probably emphasis on silver because of the ratio and the historic prices and the industrial use case. That's a separate conversation, obviously. But in terms of the relationship, they will often be lumped together as primarily fiat alternatives. And of course, there's a big back and forth that goes on between people who are precious metals only, people who are crypto only, and then everyone in between. For me, it's worth understanding the different use cases and the potential. And if you want to spread things around, then you can. You just have to do so in a responsible manner. Would gold and crypto move together? Well, if we see events that many have predicted for some time and that have the potential to come to pass in terms of the reduced dominance of the dollar or a systemic crisis that threatens the trust and the confidence in the current system. And between you, me, and everyone listening, Kerry, I still don't understand why there's any trust in the current system based on the way that it's constructed. I think that it's more trust based on an ignorance of the mechanics here. But that's fair. I wouldn't have thought I would have blindly trusted the system until about 5 or 6 years ago when I was a trader and on just a short-term U.S. equities desk, and QE3 got announced and the markets just ramped to infinity. And I was like, can't everyone see that this is like disastrous monetary policy, that we can't actually do this? And so I was overlooking the short-term mechanic of it being a literal injection of capital into the capital markets and thinking more broadly about the macro thesis. And so, you have to understand these dynamics at different levels. Certainly the system is past due, and it's continued longer than I thought it could because there have been new fixes and new band-aids applied over the problems. But in a scenario where we see the system threatened for either internal instability reasons or just some dominoes that go out either from Italy or from Europe or from Asia or from here in the U.S. Like it could be anywhere because everything is so interconnected. And in that scenario, you could see precious metals and certain cryptocurrencies moving together. In terms of a flight to safety, if cash is no longer an option, you would have to imagine that generally speaking, the lion's share of the capital would view gold as more of a safe haven than Bitcoin at the moment. But that doesn't mean that it wouldn't get spread out around that. And it also doesn't mean that we wouldn't see the kind of thing that we saw in 2008 when the markets tanked and the financial crisis was upon us, and we saw even gold go down just because people had to sell their positions to get liquid. I think the real question is what happens when it's the currency itself and the governments themselves that are in trouble, and there isn't another lifeline like the IMF or the World Bank or right. the BIS isn't going to be able to drop like 20 trillion because the people won't have it anymore.
Yeah. Well, I've changed my view of fiat currency and the global financial markets, Stephen, over the years over the reason that it hasn't collapsed. And the way I look at it now is that currencies are trading systems or platforms, and especially the US dollar. And it's a system for managing debt, managing cash, and so far there's been no viable replacements for it. Don't tell me the Chinese yuan is a replacement. There's a lot of skepticism. The Chinese boom and bust over the centuries. There's just nothing to replace it. And the idea of switching to, at this point, a bullion-denominated economy or a crypto-denominated economy, it's just not there yet. Now, if there were a major disruption, in my opinion, that shut down the dollar for 2 weeks, well, we would have an alternative system in 2 days. But it's just not there yet. Doesn't mean it's not going to happen. I'm with you. I shake my head in wonderment at how it could go on as long as it has. But when you view the dollar as a system rather than just a currency unit, then it makes a lot more sense, doesn't it?
Yeah, I think that that's a helpful perspective in terms of seeing from a macro view that there isn't necessarily any concrete mechanism that could replace like for like. You know, if we're not with the dollar, then what are we with? And what does the world look like under those alternate circumstances? Well, concretely and meaningfully different, regardless of how you slice it, in terms of, you know, whether you're looking at another kind of fiat currency or transitioning back to a hard asset backing precious metals or otherwise any kind of commodity currency or something digital like cryptos. And the infrastructure and the architecture, you could say, is being built, but there isn't really at the moment a perfectly viable replacement. So, you know, people would essentially have to agree on something, and then it would be guesswork. It would have to be like a Bretton Woods 2.0, where everyone gets together and says, hey, there's too much debt. These banks are going down. We need to reset the system. And what comes out of something like that remains to be seen. It depends on the people in the room. It depends on who's doing the negotiating, who's pulling the strings, and what the actual options are. And regardless of the options, it has to look something different than the current system in an event like that. Now, is the more likely outcome sort of a slow trickle as we get to the point where more viable alternatives show up and then they gradually outcompete? Well, maybe that slower kind of roll definitely is possible, but it's difficult to imagine a scenario where we sort of stretch the current system out another decade or so without seeing another kind of discrete and acute event that puts enough pressure at one point that leads to the need for a more immediate kind of whole spun solution. And that's the problem, right? Because typically we only see transitions in the big picture in response to crisis, and it's in crisis that people make either rash decisions or where corrupt elements can come in and steer the conversation towards their own benefit. I mean, we're all very familiar with the conversation in the Senate about how it's like, well, you bail out these banks or we're going to have martial law.
Yeah, well, there's some truth to that for sure. We know it. And yeah, so diversification, it's kind of like the answer to every financial issue that confronts you, but not diversification in a Wall Street sense of the term, where, put 10% in cash, 40% in bonds, and 40% in stocks, and then break your stocks down to, consumer brands, dividend payers, et cetera. Now, our diversification is a lot different than Wall Street's, isn't it?
Yeah, it has to be way more holistic. And in terms of these sort of classic portfolios, this is what you learn in college in a finance course. I also do private tutoring work. And so, I'm looking at Sharpe ratios and these optimal kind of bullet setups and capital allocation lines and all of these different things. And of course, it's based on certain assumptions. Like there are things that are risk-free assets. And, when we look at currencies, like we're talking about as a system, those in and of themselves are not risk-free. So when the unit of measurement is fluid, what are you supposed to do? And I think that in order to properly diversify, it's not just sort of between and among standard asset classes, just your typical, like you said, stock, bond, cash allocation. It has to be in terms of different event-driven macro scenarios. So it needs to be spread out across the things that will have value in the widest variety of circumstances. And so for me, that would indicate that a solid portfolio should have a core accumulation of precious metals holdings. And there are obviously a bunch of different mechanisms that you can use to accumulate that, but the diversification needs to happen. And so the question is how, and it has to think outside of the scope of the standard Wall Street kind of assets, if for no other reason than you're taking on counterparty risk. And outside of the precious metals community and the investment community, people at large aren't attuned to counterparty risk until they deal with it face to face. Like, everyone understands the idea. If you can't trust someone to hold up their end of the bargain, then that's taking a risk doing business with them. Well, the same thing could be said, obviously, for commercial banks or for investment banks or for any of these institutions, really.
And we saw in 08, 09, 10, we saw the system almost come grinding to a halt. That required huge money printing by the Federal Reserve and sustained money printing and sustained involvement in mortgage-backed securities just to keep some semblance of the market running. Now we're like approaching the return to normalcy, but it's a different kind of normalcy because it's kind of like, let me put it this way as an analogy. It's like you go in your elevator in your building, 10 times a day, you go in and out of the building. And then the last ride of the day, the doors open and there's a guy with a gun there to take your money. All right. So it's a one-off event. He's not going to be back tomorrow, probably ever. It'll probably never happen again. You're going to be more careful. And yet, Stephen, every time you ride down that elevator, what's in your mind? I got held up at gunpoint once. It could happen again at any time. And you're never the same. Even if you get over it and you don't have PTSD, your view of that elevator ride is never the same. Once you go through an existential near-death experience like 08, 09, your view of the markets will never be the same again. And that's what you have to come to terms with. Hey, people want to find out more about you, Stephen, and connect with you on the web. You got a place to do that, right?
Yeah, so over at the asset management fund, you can go to gencap.io. It's a simple kind of landing page. What I'd recommend for people if they want to send me direct correspondence is just to shoot me an email. Steven, STEVEN at gencap.io would be the best place to reach me to have a conversation, ask some questions, and to connect about these things. And what you were mentioning, Carrie, is critically important. This idea of an existential event changing the landscape of your view of the realm of the possible. And in order to keep going, you have to make sure that you're still in the game. You live to fight another day. And Nassim Nicholas Taleb, the author of The Black Swan, in his latest book, Skin in the Game, and Anti-Fragile as well, does an excellent job of describing this in terms of how we make mistakes in our elementary understanding of probability, in terms of the time series versus ensemble. And the idea is, if you have an event that's going to take you out of the game entirely, even though it's low probability, then over the long run, you're guaranteed to be taken out of the game. So if you're taking an existential risk, even one that you're not aware of, and that existential risk maybe only applies 1 out of every 10,000 times, well, at any point you can be taken out of the game, and that eliminates the possibility of any future return. It just takes everything to zero. And so thinking about these large-scale dynamics in terms of what's possible is really challenging, because it's difficult for us to gather information and perspectives that are outside of our own experience. And what that means is, when you're deciding on what to do, you have to give it your best shot to really encounter all the variables and to gather counsel and everything else like that. But we have to be humble and understand that the ground that we're walking on is also in a mobile and a fluid kind of fashion. We're trying to find our way in an ever-changing world. And from a monetary perspective, that really is challenging, because people will live through their entire lives in a monetary system, and then in a week or even a day, everything can get turned on its head.
And every day that the system persists and goes on, it's a good day. One day the system will change, because we have entropy. Systems deteriorate, degrade over time. Eventually, they're going to fail. So right now, the system is working great for the vast majority of people. There's a certain element of society that have really gotten screwed over and haven't recovered since 08, 09. But for you, if you're doing okay now, just remember that day is ahead. Hey, As always, we invite your emails. KL@KerryLutz is the email address. The Twitter feed is @KerryLutz. The Facebook page is Financial Survival Network. Steve, really appreciate you coming on the show. We're definitely going to have you back again, and I look forward to it.
Thanks, Gary. It's my pleasure. Great to be here with you and your fantastic audience talking about these really important concepts and thinking about how we make decisions in the face of uncertainty, risk, and a challenging environment.
Okay, great points all. We'll talk to you again soon, Steve.
Thanks.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.